Let's talk about the markets. The cloud of negative sentiment still hanging around customs trade since 2019 started. We're looking for a lift-off through the clouds and give us what you call a breakout. Temple Ashaju is standing by the Nigerian Stock Exchange to raise the curtain for us today. Temple, it's still an unhappy new year. I'm sorry to say that. As far as stock markets concerned, yes.
That's quite relative, boss, and good morning to you, though. You know how it is. The Yuletide rally offered a few the kind of profits that they were looking for, and they were able to quickly sell in the first week of January, of course, to quickly keep their profit. Wait for the prices of a lot of the stocks in the markets to go much lower, and then they can then make re-entry in weeks leading up to the general elections scheduled for February 16. But then that's the kind of trend we're still seeing. A lot of people are selling down to see how low the prices can go. Possibly when the prices hit their support levels, then they can now make a re-entry to await the kind of profit that will come in Q2. But that's the trend I just explained. Let's now drill down to the market, how it performed yesterday. 120 basis points negative yesterday in terms of the index. The key benchmark index settled at 30,036.15, and it looks like this January that is really going to cross, is going to fall lower to 29,000 psychological level. You know, the trend, it's about sell pressure in the market. We saw heavy losses across the sectors yesterday, except for just one of them. We also saw decline in the level of volume, activity, value of the transactions that we saw yesterday. It was also down some 20% generally. Volume in terms of the transactions was down some 2.8% yesterday. That was really mad. And we saw all of this happening in 4,508 deals. Now, if you look at the market breadth was also negative. We got just 12 gainers that experienced marginal gains against 28 losers yesterday in the market. John Holt was the top gainer yesterday, rising about 10%, while NEM Insurance experienced so much sell pressure and its share price depreciated some 9% yesterday. If you look at the sectoral performances, we've got the banking sector as one of the worst. It was basically the worst hit in terms of the sectors that we track in this market. Banking sector down 357 basis points on account of the losses that we saw on Guarantee Trust Bank yesterday, which shed some 5.47%. And if you look at the other news that surround the kind of losses that we saw in the market yesterday, we got informed about Teleology Holdings that has some key interest in Nine Mobile, and we know that Nine Mobile is indebted to 13 banks in this climb, and we say that in recent times there's been a kind of restructuring of that debt following the exit of Etisalat. Now, analysts are saying that because of the indebtedness of Nine Mobile to some major banks, and the interest of Teleology now waning in this particular company, Teleology looks to be moving out as the CEO has now left the board of that company. We're going to be seeing some kind of negative sentiments on key tier 1 banks like Access Bank, Zenith Bank, Guarantee Trust Bank, and UBA, and that speaks to the kind of sentiments we saw yesterday on Guarantee Trust Bank, which lost about 6% yesterday in its share price. Moving on now, we look at the consumer goods segments where we saw flour mills dipping about 9% yesterday and impacting on the consumer goods segment of the market negatively by 47 basis points. The insurance segment of the market was also down 3.30% on account of the losses we saw on NEM Insurance. Oil and gas declined some 1.45% due to the losses that we saw on O&O by some 7% yesterday. The only sector that did well yesterday was the industrial goods segment of the market. The industrial goods segment rose 53 basis points due to the gains that we saw on WAPCO, which is currently carrying out some kind of rights issue exercise in the market. It was up some 3.08%, as well as the gains we saw on CCNN, that's the cement company of Northern Nigeria, which closed at 18 naira 53 kobo yesterday, rising some 0.54%. That was why industrial goods segment of the market was positive yesterday. yesterday. Back to the oil and gas segment of the markets where we saw losses across board. Corn oil, in terms of the energy stocks now, dipped, was flat yesterday, beg your pardon, was down, was settled at the 23 naira 25 kobo. It's been trading at for some time now. We saw some 55,000 plus deal worth of transaction in terms of volume there yesterday. Forte oil continues to tail spin, 26 naira 55 kobo, down some 7.97%. We got 11 PLC flat in terms of its share price. MRS was also flat in share price. O&O dipped 7.69% yesterday, closing at 4 naira 20 kobo. We see the support level for that company really going lower to around 2 naira right now. Seplat is also flat at 640 naira, albeit some 7,723 units of its shares traded. Total at 200 naira 20 kobo. And we saw Etana PLC also negative 1.14% yesterday, as well as Japol.
Yes, Tempo, just a quick one. Let's run through this very quickly because quite a number of stories are developing as we speak. There's some notices from C&I Leasing as well as Nigeria NACO Aviation Company. But again, let's just step quickly into the fixed income space. It looks like that was where a lot of activities were yesterday. Look at the treasury bills for us. Okay, I think we lost that audio connections there. But very quickly, the treasury bills market was very active on Tuesday. That's more than 130 billion naira via the FMD. That's bringing it up. Thank you. And in terms of the number of deals, that's north of 500. But you need to pay attention to the discount high, which is about, what you can say is about the yield. That's about 16.20% and 16.4%. North of what we're seeing in recent times. We've been talking about this over the last couple of days. Investors are piling a lot of trading activities into the short end of the treasury bills market. We'll get more flesh on that story later on the program at about 10:30. Stick around. We'll be right back into You're Watching Business Morning.